Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquin. Happy Hump Day, baby. It's Wednesday, I think, right? Man, all these days just running together. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, of course, the physical delivery of hard assets, gold and silver. It's what we do. We do it better than anybody. It's just been absolutely nuts. You're seeing demand coming from all sides. The older investors, people that have been investing for years, continue. The new ones, right? People that they've been thinking about it for a while. Are in the market. Millennials are in the market. Everybody's in the market. And we got a great show. Listen, we're going to talk about what's happening and what has happened in the Palladium market, the Rhodium market, what's happening, I believe, right now in the platinum market, and what we're forecasting to be in the silver market. So stay tuned for that. We're going to go into some pretty good details here today on just that topic. What I like to call them the other precious metals. Very interesting chart formations and demand formations forming not only in silver but in gold as well. And what does it have to do with platinum, palladium, and rhodium? And we'll talk all about that today. But I know all of you want to know. I know you do. The battle for the basement last night, our bowling team, we were absolutely victorious. Our bowling shirts came in, so we all had our shirts on. And we bowled. I bowled the best game of my life. Well, now, not that it's, I'm not a good bowler, but I bowled a 180. I followed that up, though. Listen, it was great. Okay, and I'm not going to lie. Okay, there was a lot of smack talk going on. There may have been a crotch chop. Maybe. I'm not saying there was or there wasn't, but there could have been. The problem is you got more games to bowl. And the next game, after the best game of my life, I bowled a 114. And one frame, I threw two gutter balls. And that's hard to do. And I'm not one of those, the bowlers, they got the spin, right? And they throw those curve balls and they look awesome. Yeah, I don't do that. No, I throw it straight. So how twice in a row I could throw it in the gutter while trying to throw the ball straight? Yeah, it defies logic. But, that's just what you get with me. And the third game, I rebounded nicely, bowled like 147. It was actually the highest pin total for me yet. We are not the worst bowling team in the league. Matter of fact, listen, we think we're going to make a move. I'm telling you, we're fired up about it. And I owe it all to the My Kind CBD products. I am a faithful taker of it. It's, and for those of you that have seen me, right? I'm a bigger guy. My body's beat up, and you can't do things that you used to do. It's, simply like bowling 3 games. I've never considered bowling 3 games. Like for me, it was like, I'll bowl 1, and then by the second game, right, my knees throbbing, my hip hurts, my arm, my neck, you name it. I was like, okay, 2 games, that's it. Go out to 1360 KHNC and hit the shop button. I'm the 1,000 milligram tincture. I take it every day. I just take a dropper. It comes with, it's a little glass bottle with a dropper. I just take a dropper, put it under my tongue, boom, done. Got it sitting right next to where my keys and wallet are in the morning. I am also a big fan of, as you know, I got this crushed nerve and arthritis and all this other stuff in my neck. I've been taking the lotion and putting it on there. It really seems to help. So we got lotion, we got the salves, we got the pet tincture. I told you I got an email from one of our people that their dog is an older dog, was having trouble even walking. They got the pet tincture, and about over the course of 3 to 4 days, dog was jumping around, running around. They couldn't believe it. Got a nice email from another customer loving our CBD products. Here's the thing, and why we love it. So it's the best of the best. All natural, no chemicals, organic, no THC in it. Everything's lab certified, and it costs half as much as where you go anywhere else. Get out there, get you some. Listen, it's going to help you. I know it will. Patriot Radio News Hour when we get back. The other white meat. 800-951-0592. That is our toll-free number. If you want to place an order, give us a call. We can help you. Gold, silver, whatever it is, we can do it for you. So let's talk about what's happening in the precious metals market. When you think of precious metals, obviously gold and silver. Other people will know, platinum, right? And some will know palladium. There's a few of you out there that know about rhodium. Okay. Those are the 5 precious metals. Rhodium is the most expensive. Some of you will remember a few years ago, I made that rhodium call and told everybody that would listen, buy every ounce of rhodium you possibly can. And it was like $600. Rhodium today is $19,000. And rhodium is really an industrial metal, primarily used, and green energy, right? Solar panels, and it's a coating. It's very reflective, rhodium, very hard metal. Matter of fact, the only place I think the Perth Mint will make a rhodium bar, and then there's a company in England that makes it. Nobody else does. It's super, super hard. It's a very, very hard metal, and it just chews up machinery. And obviously at $19,000, just very, very expensive. If you asked me today, would I be a buyer or a seller of rhodium? I'd probably be a seller, right, at $19,000. It took out its all-time high, I want to say last year. Its previous all-time high was like $10,000. That's why I made the call when rhodium was 500 and change. And I told everyone to get in, thinking that, hey, it's going to at least go, just a normal rhodium market. Rhodium should always be somewhere between $4,000 and $6,000. I had no idea, I know rhodium was going to go to 20,000. No. But rhodium, platinum, palladium, the other 3 metals, they're all widely used in industry. They're industry metals. All of them widely used to fight, if you will, greenhouse gases. Platinum is used here in the United States for catalytic converters. Well, it's one of the things, but that's the main use of platinum, is to help clean, the exhaust, if you will, that comes out of the car. Matter of fact, you've been seeing it. I've been seeing it on the news. The catalytic converter thieves are back, right? The urban miners, right? They come in with whether it's a sawzall or what have you, and slide under your car and cut out your catalytic converter. And what they do, they're doing that to get the platinum. And they can take it, a catalytic converter. If scrap yards aren't supposed to do it, but there's always somebody willing to do it. I think it's worth like $300 or something. I mean, it's worth some money there. Platinum also used in solar power. Palladium, same thing. Now, palladium, that's what the Chinese use in their catalytic converters. And palladium was a $200 metal. Today, palladium is $2,300. And a lot of people are saying that what's happening, and we'll focus in on the silver market, but it's happening in the gold market as well. Very similar patterns here, where the paper markets are ignoring what's happening in the physical markets. And by the time they realize what's happening, it's too late, and then you see these massive spikes. Let me just give you a case on palladium. So palladium, like I said, palladium now $2,300. If you go back to 2016, palladium was $500, $400. And that had doubled from the year before. And then all of a sudden, in 2017, palladium goes to over 1,000. As people are like, wait a minute, all the palladium's disappearing, the physical palladium. The paper markets hadn't realized that the physical palladium markets, they actually started running in 2013, 2014. By 2018, palladium hits $1,300. Last year, palladium hits $2,000. This year, palladium has been as high as $2,800. And again, think about what I said before. Palladium was a $200 metal. And as solar power and all that started taking off, as the Chinese automobile market took off, the paper market, these guys aren't that smart. I guess this is my point. How in the world did the paper markets miss this? How could a metal go from $200 to almost $3,000 in a 4 to 5 year period? How does that happen? And really, the answer is that the paper markets were just so used to, hey, a lot of these trades are just trades. Right? We're not taking physical delivery. Right? JP Morgan, they're just placing bets. They'll bet tens of thousands, hundreds of thousands of contracts with no intentions of ever taking delivery. And they get caught up in these markets. They do. Because, this is just how the market works, and I'm a market expert. And they're not even looking at how many contracts are actually being delivered. Because if they had, they would have noticed, oh, wait, 2012, 2013, 2014, the amount of palladium contracts being delivered tripled. And then they tripled again. And they created this short squeeze. You got to remember, as miners out there, they're mining products, and they're like, well, I know I've got some palladium over here, in the woods somewhere, right? There's no power, there's no this, there's no roads, there's no people. But at $300 or $400 or $500, it's not worth my time. Now, had the price been $1,000, it would have been. And those mines would already be online right now. But guess what? It takes forever. And this is the thing that people don't realize. How long it takes for a mine to become operational. It's not like a company could say, hey, you know what? You know that palladium we found in the middle of nowhere? Let's go start mining that. And you see it on TV, right? You watch Gold Rush. You got Parker Snobble and Tony Beats. And they drive out there with their machines. And they rip up the ground and they sluice it all out. And they're mining like right now. That's not how it worked. All that ground that they're mining on that show. That ground was bought decades ago. It takes a long time, and especially the mines that we found recently, they're in the middle of nowhere. There's nothing out there. It takes more than 10 years to get a mine up and running. And this is why we're seeing a metal like, take palladium. When you talk about precious metals, rhodium's always, if you rule of thumb, rhodium's the most expensive precious metal. Next is normally platinum. Matter of fact, go back over the last 50 years, it wasn't until really the last, 3-4 years that platinum has been cheaper than gold. Now, platinum's starting to move. Matter of fact, platinum has broken through some major resistance over the last several days, and I expect that to perform very well. It's going to get a lot closer to gold. I wouldn't be surprised if it even passes gold again. It should. Then gold. Gold's the next one. Then palladium, and then silver. Right now, palladium's the second most expensive one. And it's going to take, it's probably got another 5 years before enough palladium could be on the market. And who knows, with green energy, there may never be enough. But now we're starting to look at gold and silver. And we're seeing the same trends that we saw in rhodium. The same trends that we saw in palladium. And by the way, the reason why platinum got so cheap, just so people know, is a lot of the mines, the platinum mines, also had rhodium in it. And so these miners were overproducing the platinum to get to the rhodium. Right, because it was worth it. Right, it was way worth it. Hey, it's worth it. So what if we only get $900 for platinum? We're going to get $2,000 for the palladium. So they were deliberately overmining. That's kind of starting to run out now. But now we're looking at gold and we're looking at silver. We've got The same dynamics at work. We've got huge increase in demand. Once again, paper markets haven't realized it yet, right? Because they've been doing this a long time. Oh, no one takes delivery of these contracts. Yeah, they do. And, of course, silver, a very industrial metal. Also, solar panels, computers. I mean, you name it, all the new green stuff, silver's involved. But we started to look at supply, because this is really what pushed what I'll call the super spikes in rhodium and platinum. Increased delivery of physical contracts. Well, a depletion of supply. 800-951-0592. That's our toll-free number. We're talking about paper contracts. Right? We've had multiple examples of the 5 precious metals. 2 of them, and I would say the 2 you hear the least about, rhodium and palladium, had super spikes. $500 to $20,000, $200 to almost $3,000. Big moves, and over a course of like less than a 5-year period of time. And these markets now, especially when we'll focus in on the silver market, we're seeing very similar things happening. Number one, it starts with demand. Yes, I know, they wanted to make a big deal about the Wall Street bets and all that. I mean, some of them did, right? I'm sure some of them did buy silver. But as I told you, my son is heavily involved in that. Matter of fact, he has a portion of my wife's and I retirement. And we're doing quite well. And he's never bought silver with it, by the way. Right now, just it's kind of ironic. He's buying some marijuana stock. I don't know. I don't follow it. I don't care. But the physical demand that is coming out of industry, listen, every major country in the world, with the exception of China, has seen massive increases in their money supply. It's extraordinary. And they're all spending money, and you think about cell phones, laptops, and all these things that make Zoom chats possible. Dude, silver's involved. It's involved. Green energy. Wait till you start hearing about that, right? In the next 2 weeks, that $1.9 trillion is going to pass, and then they're going to go focus on the green energy. Get ready. But the paper markets seem to be asleep. And that happens. They get comfortable. They're not paying enough attention. I'm sitting here and I'm looking just at my company. Silver demand here is up 30 times, not 30%, 30 times. It's off the charts, and it's everywhere. There's not a dealer out there that'll tell you different. And then on the industrial side, demand for silver is off the charts. On the mining side, got a problem. Silver mining, right? The big silver mines, especially Mexico, primarily one of the largest, right? These mines are getting old. Production's going down. The new mines were based upon old demand. The new mines got to look at the spot price. And I'm going to tell you right now, at $27, and people are like, yeah, okay, yeah. I've got some silver. I do. I mean, it's way back in the jungle. And I mean, you know, we've done the math. It's not the greatest quality. You know, we know how much tonnage that we have to haul out. We know what our costs are. You know, you look at crude oil back close to $60 again, right? They're like, and now Bitcoin and all the other coins making power way more expensive. We're not going to start. Now, silver right now, there's no doubt in my mind. Silver right now should be somewhere around $40, $50 right now. And at that price, you would have some miners out there saying, you know what, let's start developing this. Right? Let's get the permits. Let's deal with the whatever government it may be. Right? Let's start building the roads. Let's get a power plant. Right? Blah, blah, blah. Hey, and in 10 years, we'll start producing this silver. But that's not happening. Gold. Same thing. Matter of fact, the largest gold producer in the world is China. Right? They export no gold. They import over 1,000 metric tons of gold. 3 years ago, China was mining 450 metric tons in a year. Last year, it was down to 380 and falling. And China's gold reserves, where they about the gold that they know's in the ground, isn't very large. Matter of fact, people are talking that at the pace that China's mining in the next 10 years, China will no longer be the world's largest gold producer and could be suffering a fate like South Africa, where they just ran out. And you're not seeing the paper markets reflect this. I think one of the great experts in the silver market, the Lombardi report. You should follow that for sure. He does great research, and he was talking about, you know, Wall Street bets and paper silver. Here's what you need to know, he says. The group telling its members to buy silver is just one factor. I've been following the silver markets for years, and the figures related to investors buying physical silver has been increasing all along. Listen, I've been here 18 years. I can tell you right now, the amount of silver people bought in 2003, 4, 5, 6 paled in comparison to what people were buying in 2015, 16, 17, 18, 19, 20, you know. I'll tell you what else he had to say when we return. 800-951-0592. And this is from the Lombardi report. Is there a short squeeze in silver? No. It's something much worse than that. Or better, depending on your perspective. It's not a short squeeze. You know, a short squeeze implies that, hey, if we all enough people go along, we can get something to be worth more than probably what it's worth, right? I.e., GameStop or AMC or any of those other companies. They weren't good companies. But a short squeeze implies something very temporary. It's not what we have here. Far from it. This is a physical squeeze. And we've learned through the other precious metals, rhodium, palladium, the paper markets seem to be the last to know. And then when they finally realize it, you see huge gains over a very short period of time. I don't think 5 years is a long period of time. So are you telling me, now remember, people forget this. 11 months ago, not even a year ago, 11 months ago, silver touched $12. So I think $12 could go to 120 or 240 or 500. Yeah, damn right I do. Back to Lombardi. When he was talking about the factors, saying, listen, I've been involved in this silver market for years. I've been involved in this thing for almost 2 decades. Figures related to investment buying of physical silver have been increasing all along. 2004, 2003, the government minted, 7 million silver eagles for the whole year. Hell, we sold 5 million ounces of silver eagles in 2 weeks. So what's the disconnect, he says? The disconnect's happening in the physical silver market. The silver prices you see quoted on the mainstream media are usually the future market's price. The futures markets are ignoring what is really happening in the actual physical markets. And that's why, at least in his opinion, we're seeing suppressed silver prices, suppressed at $27. We've seen something just like this in the palladium market. The palladium futures market was simply ignoring the physical supply of the metal. And when they finally realized what was happening, right, the price of palladium, right, as I told you, just took off, went through the roof. How about this? John Feeney, Guardian Volts. A lot of mainstream media picked up on the silver story, calling it a short squeeze, which was misguided. The real story that's happening is a physical squeeze, where it's really difficult to get any stock of silver. Even after the pullback, which, I mean, again, this a $2 upswing and a $3 downswing, that's nothing in the silver market, but okay. We continue to see robust demand, and he's not just talking about, junk silver. He's not just talking about silver eagles. He's talking about industrial silver. He's talking about silver used in industry. Everyone is selling out of their holdings almost immediately, according to the Perth Mint. They've had to stop taking orders. The Canadian Mint has stopped taking orders. The U.S. Mint has stopped taking orders. You also see refineries now. They've stopped making 10-ounce bars. They've stopped making 100-ounce bars, 1-ounce bars, right? They're just making the kilo bars because there's enough demand there, and that's all they can do. And they're saying, and again, another one pointing the same thing. This is a very similar pattern that happened in palladium, where there was strong industrial demand. The prices started to move into a bull market. You heard stories circulating about a physical supply drying up. right? Think about gold, think about silver, physical supplies drying up. And then what happened was large-scale speculators entering the palladium market, and then it really took off. I look at silver, and I can see something like that happening over the next 12 to 24 months. And I agree. Listen, I've looked at it all. We see it all. This is a physical squeeze. This is not a short squeeze. They only wish it was a short squeeze. And again, this is happening. I think, we saw rhodium and palladium take off. The next squeeze, I think you're seeing gold and silver take off because they're in identical type patterns. Demand is overwhelming the supply. The supply isn't on the increase. The largest producers are starting to hit peak production and going the other way. And demand is unrelenting. When we come back, I got a gold special, I got a silver special. I'll give you an opportunity to get in while it's still early. Patriot Radio News Hour, final segment coming up. 800-951-0592. Gold's up 5, 1841. Silver's actually down 15 cents, 17.15. I don't think it's going to stay there. And maybe not to the end of the day even. Just a lot of action in both the gold and the silver markets. And I think we finally figured it out. This isn't a short squeeze. This is a physical squeeze. And this squeeze actually started quite a while ago. It's now being go back to 11 months ago. We're 11 months into a squeeze that was already in progress. Really getting squeezed. Now the beginning of this year, a super squeeze that has been unrelenting. Here's what I've got. I've got 20. I was able to get these this morning. 20 $20 gold pieces. I was able to get the ones at the lower end where we always like to be. 21.65. And just to let you know what's happened, you don't think the squeeze is real. Right now, I've got 20s at 22.25. So that's a $60 savings. Here's the thing, I only got 20. That's it. And then you're going to get, AUs and things of that nature. You're just going to go up the scale there. Silver. I have one bag of $50, and then I'm out again. This is it. This is the last bag. Everything changes day to day. If you buy the whole bag, $28,000. Say $500 if you buy the whole bag. If you want to buy them by the roll, $285 a roll. I do have bags of quarters, bags of dimes. Those are at $27,000 for the bag. That's 715 ounces. Silver Eagles. I have a source. I don't know what dates they'll be. They could be new ones. They could be old ones. They could be anything. They're $800 a roll or $20,000 a case. Delivery in 2 weeks. So you've got some choices. If you have to have Silver Eagles, that's where they're at. And I can get them. If you want to order those, you can. $800 a roll for me, just me. I'd buy BUP dollars for $800 before I'd buy a Silver Eagle. That's just me. But what do I know? Again, listen, go back 11 months ago. Right? When COVID hit, silver was like $13, $14. Couldn't get a Silver Eagle. Remember, they were $25 a throw. I'm like, don't pay that. Well, look, that would have worked out for you if you did. I like junk better, right? Cost per ounce is less. I just like less cost per ounce. But, however you want. But A lot of people now that really follow the silver and gold markets are saying, hey, this isn't a short squeeze. This is a physical squeeze that's reminding people of what happened with palladium. And if that's the case, look out, right? It really doesn't matter what you buy at $40 an ounce. If we got a palladium squeeze, it's going to be off the charts. 800-951-0592.